Welcome. You're watching Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar on this edition of Market Today. Remember, Samvat 2080 has begun on a positive note. Buyers swarmed the Dalal Street on the auspicious occasion of motor trading on Diwali yesterday, taking the benchmark indices higher amid lower volume albeit. Investors' wealth also jumped more than 2.2 lakh crore rupees as of yesterday. We did see the Nifty advancing 0.5% in trade to end the day at 19,525 in a special session yesterday. Now, will the momentum continue is the big question in this truncated week. We will tell you all of it, but first up the top headlines of this hour. Indian stocks are likely to consolidate in a narrow upward band on Monday as investors now work the math on valuations after decent 675-point rally on the Nifty in less than 13 sessions. Government-run public sector enterprises will continue to hog the limelight in thin trading session as traders punt on bullish momentum and investors put in fresh money into relatively inexpensive stocks compared to the private sector peers. Good morning to you, all our viewers, and good morning to you, Shail, as well. It was a great session yesterday. We've seen that Samvat 2080 has begun on a strong note with the index closing at the highest level since October 20th. In fact, we did see 2.2 lakh crore rupees getting added to investors' kitty, which means that in the 60 minutes of trading session, investors' wealth rose by 62 crores every second during the trade as well. So that's a big positive. And now the Nifty 50 has also gained about 550 points from November 1st as well. It's been up for the last 3 out of the 4 trading sessions. The big question is, will the momentum continue in this week, which is a truncated one?
Right. Good morning, Sakshi, and a very warm welcome to thousands of new viewers who are joining us on Market Today at Business Today Television. I think, Sakshi, we've done as far as the Nifty is concerned. The festive season is over. And the rally from the low of October 26th, which was 18,852, has now peaked at 19,525. Beyond this, over the next 15 days or 2 weeks, as you might say, we are going to see a lot of volatility in the market. The Nifty at best is likely to remain flat in a consolidating zone. I'll tell you why. We have 5 state elections, and the fact that you will have the poll coming in, the exit poll coming in on December 2, December 3. So on that time, between that time scale, the rally that you've seen, the 650, 700 point rally will be digested by the market. So the main indices, whether it's the Nifty Bank or the Nifty 50, are likely to consolidate in this zone from, 19,400, 19,350 to 19,700 kind of zone. And that's how the structure is. There's nothing positive that I could make out from any of the index heavyweight charts which I saw over the weekend. So you've had a nice 100-point bump up yesterday in Muhurat trade. That will be taken with thanks. And now that festivities are over, you will get down to brass tacks. So earnings and the way the markets will function as to how the ruling party at the center is going to perform in the 5 state elections that are there in front of you. So yes, we have a support at 19,300, 19,400 on the Nifty. Yes, we have a fresh resistance at 19,600 on the Nifty, but it's going to be a narrow trading band of 200 points till the end of December. And in that point range, you will see a lot of volatility because you will see, elections overriding the main sentiment on the Dalal Street. So thanks for the rally so far, but from now on, a sideways to consolidating zone on the Nifty for the next 2 weeks.
On the Nifty Bank, Shail, what are you going to be watching out for? This index is also up about 1,200 points from the start of the month, and it also closed within touching distance of 44,000 mark, briefly surpassing it during the Muhurat trading session as well. What is the expectation there?
So the trend is again sideways to consolidating to up. Sakshi, the problem with the Bank Nifty is that none of its major components, apart from Axis Bank, are showing any signs of life. Nothing is happening on HDFC Bank. State Bank of India is not doing anything great on the charts. Apart from Axis Bank, all stocks are quiet. And the strongest counter that I see is AU Bank, which has next to zero weightage in the Bank Nifty. So you see this chart in front of you is going to be a narrow trading band. You have the Nifty, the 200-day moving average supporting it at the lower base, and 44,000 seems to be a resistance that has crept in the form of the options chain, as also the 100-day moving average. So again, a sideways to consolidating trend. The next 15 days are going to be completely enveloped with the election noise in Rajasthan, Chhattisgarh, Madhya Pradesh, Telangana, and of course Mizoram. So all that and more will now be decided more by politics than by earnings, sentiment, or liquidity. Sakshi.
So from the F&O basket, are there any stocks that you're watching out for, Shail, today?
Yes, Sakshi, a lot of them look very good, and most of them are in the PSU banking basket, in the PSU basket. And you see, we discussed Coal India yesterday. Hindustan Copper looks really good as far as price action is concerned. It was amongst the top gainers yesterday, 4.3 rupees up, 3% gain, and a decent rise in open interest. Remember, yesterday was a truncated trade. You just traded for 1 hour, but nice chart structures coming in on Hindustan Copper, and of course NMDC, NTPC, ONGC, and Power Finance Corporation. So it's the PSU pack, the headline that you mentioned, that a lot of money will flow into those stocks where relative valuations compared with their private peers are reasonable, even though those stocks have appreciated very sharply. You have a record high on RECL, you have a record high on PFC, but those stocks will continue or are most likely to continue their uptrend, and newer ones will join the rally. NTPC we started tracking at 215, now 242. Look at how ONGC is moving, look at how NMDC is moving. So these are the counters where people will punt on the long side given the relative valuations which are better than their private peers.
All right, let's also look at how the global cues are shaping up to give us an indication of how are we likely to trade. Remember, US markets recovered some of the lost ground last Friday as well, with Dow Jones gaining 1.1%, S&P 500 about 1.6% higher in trade. The Nasdaq saw its best day since May as well, ending with gains over 2% on Friday as well. Asian markets have taken on to those cues, opened higher on Monday, right ahead of the key economic data and amid high-level talks between US and China as well. Remember, the Nikkei up 0.5%, but now you're seeing some pressure building up on Kospi, Hang Seng and Shanghai as well at this point in time. As far as the flows are concerned, the FIIs again remained net sellers, 261 odd crore rupees worth of stocks sold, while domestic institutional investors poured in 822 crores worth of shares as well. So that's as far as the FII flows action is concerned. But now we have a guest with us, so let's introduce him as well to you. Dharmesh Kant is with us, Head of Equity Research at Cholamandalam Securities. Welcome, Dharmesh. Good morning to you and season's greetings again. Your thoughts on the markets and the new Samvat, especially this truncated week. What are you watching out for?
Yeah, good morning, Sakshi. Good morning, Shail, and good morning to our viewers. Happy Diwali to all of you. Shail has summed up very well. The market is now poised in the short term for the outlook on the state elections, which are likely to pan out. So next 2 weeks, 2.5 weeks for Indian market will be more on pre-positioning on the outlook of the election results, which are likely to be there. As far as the macro global is concerned, I think the rating downgrade by Moody's of US was what was desired by US Fed, because effectively what it will do, it will raise the effective borrowing cost in the US. And that is what Fed has been trying, so that on the ground level, the interest rate goes up to an extent where inflation can be tamed further without them, hiking the interest rate. So this takes into account the further rate hikes. So I don't see any rate hikes coming for the next 3 months, either from US, Europe, or any of the Asian markets. So that's a good news for the market. At the same time, this week is a data heavy week on the IIP data coming out from US as well as inflation data from US, Europe, and India. So, I mean, macro data are there, but broadly, the market is sweetly poised as far as our market is concerned. And what we are looking forward to is any minimization of selling by the FIIs are going to have a big trigger on the domestic front for the upside of the market. Numbers were excellent. Almost 30% kind of Y-on-Y growth on profitability was seen of the basket. We did a 490 stock basket, so there it was seen. As far as BFSI is concerned, it was 46% for 41 stocks under our aggregate list. So no complaints out there. Q3 is likely to be better than Q2. So everything seems to be well poised. But as of now, it's more of a stagnation kind of a market, range-bound activity with some volatility playing out. The macro has been taken care of, be it inflation or the earnings. So look out for spaces where, as Shell pointed out, margin of safety is high. So for next 2 weeks, it would be, the CPSE basket stocks, which would be doing better than the general market in place. But I mean, just to sum it up, the bias is to go long on the market in selective pockets.
Right. Namaste Dharmeshji, and a very warm welcome to you. Fresh Samvat takes root on the Lal Street, and the mood, at least in the mid caps and small caps, is at par with what the mood is in the Indian cricket team. A lot of strength coming in via liquidity. While the broader markets might fluctuate or remain sideways, what are the stocks that look interesting to you, Kantji, given the margin of safety that they offer at this level? What looks good?
Yeah, Namaste, Salji. So, I mean, the market as such is looking pretty well, although financials have not been performing, but that is one basket where the numbers have been the strongest, and Q3 is likely to be better than Q2 because we have seen the auto sales number and the housing sales number on the macro front. So these are all going to play out on the numbers of financials when they report the earnings. The recovery has been very good. I mean, most of the companies whom we talk to, auto pain is coming from the people who have borrowed money from them. So that side, I mean, 96, 97% kind of a collection is being seen. And that has been very robust. At the same time, asset quality is being contained. So the top pick from the financial space, that is NBFC space, is Poonawalla FinCorp, which we have been recommending for quite some time. And any declines out there because of the market correction, we have been recommending our clients to pick up on that. So from a year's perspective, we think 450 should be the price target. So one of the best asset quality in the industry at net NPA at 0.72, your AUM growing at 13-15% on a sequential basis. At the same time, ROA of 5%. So it takes tick mark all the boxes. Other than that, I think the spaces which look very attractive is railway infra, where we have been recommending RBNL, defense space, where we have been recommending Hindustan Aeronautics, and on a larger play, which I mean, if you are playing the economy on a larger part, I think Reliance Industries poise a very good opportunity. But this is a long-term play. You should be at least a buyer for with a perspective of 1 year or more. So there, the SOTP part valuation, if you do based on FY26 earning multiple, I mean, 3100 to 3200 is the stock price on Reliance Industries. And here we have not taken into account the tailwind of clean energy business, which may play out. So large part of capex has been done on the 5G front. So these are the few areas and stocks which looks pretty attractive.
Okay. Mr. Kant, you talked about Poonawalla FinCorp, RVNL, HAL, and Reliance Industries as your top stocks that you'd be watching out for and be recommending for this, Samvat as well. But anything from the small cap basket, because small caps have outperformed 37% surge Samvat to Samvat, and even on the Motor trading day, that was the index that was the highest clocking index, I mean 1.5% up in trade. Anything from the small cap basket that interests you?
Yeah, definitely. There is a couple of stock ideas out there. The problem with small caps is that they are very volatile and erratic as far as their numbers are concerned or profitability is concerned. They are cyclical in nature, annual basis. So 1 year can be good and 2 years can be a consolidation phase for them when they jump to the next league. So we have identified a couple of ideas. So my only, I mean, constraint at this juncture is, I mean, by this weekend, we would be coming out with an initiating coverage on one, and on the other, the next week. So we will discuss when we are out with the report on that. But to sector specific, I can just give you a hint. One is from the power sector space and the other is from the textile space.
Okay.
Fair point. You have a strong traction coming in Poonawalla FinCorp, Hindustan Aeronautics, and of course RVNL according to Dharmeshji. It's 8:58. Sooner than later, we'll have the pre-open rates in front of us. In the large cap space, Dharmeshji, what looks interesting to you? Somewhat 2079 was almost a washout for the Nifty. Up just 6.5%. Anything in the large cap space that catches your attention, which could be added in the form of a SIP on the long-term portfolio?
Yeah, definitely. I mean, banking is one space which is looking very attractive along with the infra space. So among banking, the stock to be acclimated for would be Axis Bank, followed by ICICI Bank. These are the two topics. I mean, we need not to be spoken about the earnings and the fundamentals. It has been discussed at length on your channel as well. So those all the tick boxes are out there. At the same time, infra space, we should be looking for Larsen and Toubro because most of the painful contracts are over. Now, when CY24 would be a year with tailwind of new contracts where they have margin of safety playing out for the input cost escalation playing out, and at the same time benign commodity prices will pay out. So the margins will further improve for L&T. At the same time, they are sitting on a very strong and a robust order book. So these are the two areas: infra, followed by banking, Axis, ICICI, and L&T. Three large cap stocks. For somewhat to somewhat, I mean, one can look into getting a sip on that. And my own sense is you should be ending up with more than 15% kind of a stock price gain by next Diwali.
Okay.
Chaliye. The cues are in front of us. It was a flat to weak kind of a cue coming in from GIFT Nifty, and that's how markets are likely to react. I hesitate a lot mentioning the first tick on the Nifty. We'll ignore it. This is not likely to happen on the downside. Nevertheless, let's look at stocks that are doing pretty well. Okay, Tata Motors up 0.6%, 658. We have a nice green tick on TCS, 0.23% higher, 3365. ITC is trading at 440, 0.3% higher. There is a steady improvement in the value of the Nifty, still no recollection or no closer to reality. We'll just wait for this to stabilize. L&T is opening 3054, flat at the moment. Let's look at Infosys, flat at about 1388. Reliance will also settle down on sensible prices, and we have let's look at HDFC Bank down 1.3%, 1480. These prices will definitely settle down. Let's look at the F&O space minus the index heavyweights, and Sakshi, as I had mentioned, it's going to be a PSU led day. Hind Copper 2% higher, 153. NTPC 0.5% higher, 246. NMDC 0.8% higher, 173.80, and Coal India 1% higher, 336.45. We'll wait for these prices to settle in a fairly decent zone. Coming back to you, Dharmeshji, what looks good to you in the cement space? Nothing much happening on Ultratech, ACC, Ambuja, all down as far as long-term investors are concerned. Anything that catches your fancy in this particular infrastructural-led sector?
I think Dalmia Bharat is one stock which can still have a good traction, considering the fact the type of capacity they are likely to build over a couple of years, and their pan-India foray is still to happen. They are still concentrated more on the East India and the South India. So the management has been pretty strong, balance sheet is pretty strong. They are sitting on a lot of cash, and they have been very constructive. And I mean, the management has played out very well their commentaries which they have given in the past. So there's a weight of evidence which suggests that whatever they have spoken has been actually resulted into the earnings and profitability. So that is one stock where one can expect a good traction going forward. But having said that, the point with cement stock is they are more of a trading cyclical play from here on. So most of the upside has been capped into their prices. Valuation, they are trading at one standard deviation ahead of the mean multiples. And here on, maybe 7-8% or 10% is the maximum gain which you can expect. So keeping this in line with the fixed deposit returns which you are getting, then don't look pretty attractive now. They were attractive a few time back, I mean, a few months back. But as of now, you have to be very choosy. And there, I think Dalmia Bharat still has some juice left.
Okay. Mr. Kant, your thoughts on Coal India is what I was seeking. This stock was at a multi-year high even yesterday. Results were better than estimates on a lot of accounts as well. Better than expected realizations. Blended realizations per ton were, at 1,723 rupees, but definitely higher than the estimates, most of the street estimates right there. Your thoughts on the stock? Again, it's up by 0.8% in the pre-open trade.
Sakshi, I am a contrarian out here. So we have a sell rating on Coal India now
Okay.
after this run up, because I think the most of the power capacities which are coming up is on the renewable front. It is wind or solar. At the same time, domestic prices of coal has not moved up significantly. International prices are down 70% year till date. So a lot of supply overhang would be there. So supply would be more than what the demand is there on the ground, and most of the upside trajectory has been done it. So here is a time to take profits rather than taking a new buy position. In fact, in case you are having a buy position and you want to ride the momentum, keep on trailing your stop losses. So my technical friend can guide you more on that as far as trading of stop losses are concerned and the fresh targets on that. Fundamentally, for me, it's a time to take profits.
Okay. Right. Okay, let me take some more stocks with you then, Mr. Kant. What about, two stocks that was widely discussed in yesterday's trading session was CDSL and Bombay Stock Exchange. Your thoughts with the kind of stellar move that we've seen on both of these in the recent past?
I think this move is likely to continue. The type of expansion we are seeing and the participation by the retail clients is quite encouraging. At the same time, if you see the SEPs of 19,500 crore for the month of October, and this will go up because the economy is doing very well. If you look at a direct tax number of 10.6 lakh crore of collection, so this is all coming from the personal income tax primarily. So this is what it is suggesting is per capita income is growing. So I mean, investment opportunity now is being shifted, and with more educated class coming into play to the equity side. So CDSL and BSC will keep on doing well. And it's actually, it takes just a small percentage, hike on the transaction tax or the demat charges or other charges to have their revenue multiply significantly. So these are risk-free business, very secure businesses which they are into, and scarcity premium will keep on riding the back. So please don't look at them from the valuation perspective. If you want to look at them from the point of view in next 5 years, the volume which is sitting on right now is going to triple. So with 3x kind of a volume growth happening out there, revenue and profitability, they will continue to trade at very higher valuation multiple. So keep on holding them if you have bought them. If you have not bought them, still it's a good time to get into them.
Fair point. Let's look at how trades have settled in the pre-open space. The Nifty is now a sensible 40 points lower, 19,484. Today's battle will be between 19,450 and 19,500 as far as the bulls are concerned. Very, very strong open interest supports are seen at 19,400. So if the Nifty dips intraday towards 19,400, it's the 19,400 call that will become operational on the long side. Let's look at prices which are contributing to this kind of a red tick on the Nifty. Infosys is opening 0.8% lower, 1377. HDFC Bank is 0.5% lower, 1492. Hindustan Unilever 0.4% lower, 2481, and Reliance 0.3% lower, 2322. Remember, these are pre-open rates. Which are the stocks in the green? Sadly, Sakshi, not one in the index heavyweight structure of 10 are in the green, but that is the structure. That's fine. Like I said, the Nifty is going to be in a sideways to consolidating to a downdraft till December 2nd. This is fine, no issues. Let's look at the top gainers within the FNO space. It's Hind Copper 150.5, 0.3% higher. Dalmia Bharat is what Dharmesh ji also mentioned, 0.5% higher, 2100 in front of you. And we have gains in the form of AU Bank, the stock that I had mentioned as a part of the Bank Nifty's conversation, 0.7% higher, 730. Naveen Flori, Nasha Motors, Mannapur Amadi, other gainers. Nothing much happening here, Sakshi. One point I forgot to mention was that Tuesday is a holiday for the markets, and trade will be thin, trade will be light. Because traders will want to extend positions when global markets are ticking and you have no other option. So apart from FNO stocks, let's look at NSE 500. Again, stocks that I don't want to name are gainers. Well, nothing much catches my fancy, at least. Let's look at Dharmesh ji's view. Dharmesh ji, anything that looks interesting to you in pre-open trades?
I have not gone through all of them, but I think going by the way PSU basket is buzzing, I think any small dip, if it is there, like a stock like NTPC or a power grid, they can be accumulated for trading gains for say 3 or 4 days kind of a trading perspective. Apart from that, I think today likely to will be a negative day with a muted trading bias.
Right. Mr. Kant, on metals, I wanted to take a view because that's the only sectoral index perhaps seeing some green tick at least. You know, stocks like Jindal Stainless up by 1%, NMDC, Hindustan Copper already mentioned by Shell before, Nalco, we also have Jindal Stainless and Steel and Power. Your own thoughts on the entire metal basket, sir, and how do you expect the stocks to move in the second half of this fiscal year?
Yes, Saki, I mean, metal basket is highly cyclical in nature and they are very sensitive to small news flows coming in and out. So that is one has to be a brave heart if you are trading a metal basket. And as far as structural buy is concerned, I think the stocks, the companies which are domestic focused are the ones to be bought into on declines. So this is a space where you should be looking to buy corrections rather than, buying the strength. And there, I think all steel manufacturing companies like JSW Steel or Jindal Steel and Power or even Steel Authority of India, all these three looks very good to me because they are totally domestic centric. At the same time, from the PSU space, I mean, NMDC looks good. Hindustan Zinc has its own set of issues out there, but again, it's an attractive space to be in along with Narco. So these are the few pockets which looks attractive to me. What I would avoid is an international exposure company like Tata Steel. So if I have to buy, I would buy Jindal Steel or JSW Steel rather than a Tata Steel. So, but one should be very clear: if you are buying a metal space, buy it with a domestic focus and at least have a horizon of 6 to 9 months. If you get good gains in between, it's good for you. Otherwise, you should have a good waiting period and buy the corrections rather than the strength.
Right. Sakshi, I think the best thing would be to read prices because that's what is the most easiest thing to do. Market is doing nothing in pre-open trades. So within the PSU pack, it's JK Bank that's settled 1.3% higher at 110 rupees in the pre-open trades. BML is 0.5% higher, 22.15. Garden Reach Shipbuilders 0.4% higher, 781. Strong moves coming in Coal India, NMDC, Hindustan Copper within the government metal basket. Okay, let's look at the top losers within the PSU space where you can probably look at a swing trade 2 or 3 days later. Fertilizer company RCF 1.8% lower, 122.70. GMDC is 0.8% lower, 390. Remember, this is a very good swing trade in the making. NLC India and RECL. RECL will have an adjustment to its dividend payout of 3.5 rupees per share. Let's look at high beta space, counters that are doing pretty well on the green side. Actually, Sakshi, nothing is happening.
Yeah.
Even these stocks which are really high beta are 0.5%, 0.2%, 0.3% up. It's going to be a very tough day for you and me today. How to sort of navigate this one. Dharmesh ji will take leave in the next 20 minutes, and you and I will be saddled with this market. Okay, nothing happening in the defense space as well. Let's look at stocks which I track on the latest basis. Okay, again, I don't want to take names on the stocks that are ticking in the green. Schneider looks good, 0.7% higher, 342.30. Apart from that, Sakshi, my sincere apologies. Nothing from my side to contribute.
Well, let's shift focus to the primary market. Perhaps there is some action there that Dharmesh ji can help us with. Protein eGov Technologies IPO will be listing today. And of course, the grey market premium are indicating some positives. But looking at the market, we are just like keeping our fingers crossed for this one too. Your thoughts on the overall IPO space, the IPOs that you have seen so far in this Samvat, many of them have actually given decent returns, if not stellar. But how would you be approaching the IPO space? Have you invested in any of the IPOs recently that have come in?
Yeah, Sakshi. See, what our focus was very clear. Wherever the IPO money was raised to enhance further the business, we were subscriber to that. Like EMS Limited, we did JSW Infra as well. But wherever the IPO was only for OFS, so that was the area where our concern was there. And previous 2-3 listing which we have seen did not do very well. Among one, Mamath, I still think it's scheduled to go down further, 30-40% kind of a correction. So now of late, the issues which are coming out has nothing on table. They are not only priced to perfection, they are actually expensive. So these are the IPO one should be wary of, even if you are having a very long-term horizon. So the first point number one, or the rule number one, is the money which is being raised through the IPO should be there to furtherance of business rather than fully OFS. So that is one area where one should be mindful of. As of now, I don't see any good IPO opportunities coming. So trading listing gains can be there, but the consistency and sustainability of gains is hard to find out on the things which are there on the floor as of now. So please avoid them if possible, or do your own research before subscribing for them.
Right. So Sakshi, thankfully we have the opening quotes, and from now on, markets will be a little more interesting than what they were 5 minutes ago. Okay, Nifty. Down 65, 19,455. Let's see whether 19,400 is what is looked at. At the moment, the Nifty is on its third support level for the day at about 19,451. Okay, Bank Nifty is 150 points lower, 43,844. What is sticking and what is sticking in the green, Sakshi, is BHEL, 130.45 days high. What's sticking in the green is CDSL, 1860 in front of you. Let's look at the index heavyweights, because let's start our journey in the normal way that we do. Okay, nothing in the red, nothing in the green, so that's a bit of a negative. Infosys down 1%, 1374. HDFC Bank down 0.4%, 1493. Reliance at 2321 is 0.4% lower. There is only one stock in the index heavyweight space which is in the green, which is Bajaj Finserv. Low weightage, doesn't matter. 1596, 0.1% higher. How about Axis and ICICI Bank? ICICI Bank is 0.5% lower, 938. Axis Bank is 1029, flat, doing nothing. SBI at 580 is 0.26% lower. Nothing much happening on ITC and Hindustan Unilever. Absolutely flat trade in front of me. Let's look at the FNO space minus the index heavyweights, and it's Eicher Motors, 2.87% higher, 3670, the top gainer in the FNO space as far as prices are concerned. BPCL 0.5% higher, 366.35. Hindalco, Coal India, Jindal Steel and Power. These are from the metal space that are making the flag fly high. Let's look at the broader markets. Advanced decline ratio. Sakshi, here is the story. Okay, only 580 stocks in the green compared with 1160 in the red. So 1:2 ratio favoring bears. We track 19 indices, all 19 of them are in the red. It's not going to be a good day for the bulls as far as prices are concerned. Nothing much happening here, Sakshi. Over to you. What do you like?
Well, I was also looking at Eicher Motors, 2.6% higher in trade. Apart from this, there's Aurobindo Pharma that's sticking higher in the F&O action, and Manappuram Finance, another one that's sticking higher in the F&O space. Alchem Laboratories, so slight pharma healthcare bias over there, of course, apart from the metals pack. Then you also have Birla Soft. That's now up 0.5% in the F&O space as well from the mid-cap IT basket. And ABB India, Adani Enterprises, some of the other stocks that are moving higher in trade. From the broadest index, Nifty 500, we have Gujarat Pipavav, DCM Shriram, CDSL again, that's up in trade, almost 2% higher for CDSL right now. We also have IIFL Finance, that's up by 1.1%, Bharat Petroleum, that's up by 1%. Then we have, Oro Pharma, like I pointed out, 1.5% higher, 361, up by 1.1% too. So, broadest index perhaps does have some winners in the F&O space as well. But index-wise, it's definitely a bleak picture, barring some few names here far in between. But Mr. Kant, anything that you spotted in the opening, and your thoughts on Eicher Motors, the top gainer on the F&O space today?
See, auto stocks have, done well, and the numbers were very good as far as the monthly auto numbers were concerned. And this is likely to be on the upward trajectory with the launch of new bikes, and everybody is trying to have their share in the market. At the same time, input prices are benign. So I think Eicher Motors, Bajaj Auto, Hero MotoCorp will continue to find buying traction on declines. For the day, I don't see any positive thing playing out. More or less, it would be a flat to negative kind of a market for the day. Some profit taking play coming into the scene with this repositioning of elections. So this week will be very difficult from trading perspective. As far as investment buys are there, we have discussed about that. But yes, having said that, auto space, particularly the two-wheeler space, look attractive, and there Eicher Motors, Hero, and Bajaj are the topics. I think Bajaj Auto is likely to do fairly well compared to Eicher and Hero because of the fact that international market is also picking up for them.
Sakshi, yours or mine?
Yours.
What can I say? There's nothing moving, but still, I'll make an effort. Okay, Aurobindo Pharma. After many months, actually years, Aurobindo Pharma is now back in the 4-digit level. 1,006 is what I see, and 1,009 now. And like I have repeatedly said, I have never known a more high beta counter than Aurobindo Pharma. I just want to see a couple of things. One, of course, that it's the top gainer in the pharma space, and I just want to see what's the breakout level. Okay, we've seen this price in May 2021. Okay, and it's a breakout that's happening in price as well as volume. We have the first 10 or 5 odd minutes of trade happening, and the volume is fairly substantial on Oro Pharma. 5,51,000 shares have been traded, Sakshi, and this is something that is actually looking good in the charts. So it's led by pharma today, Sakshi.
Yeah.
Biocon, although down, has 50% of its volume already traded, and that's how it is. Aurobindo Pharma, 25% of its volume is traded in the first 2 or 3 minutes of trade. This is something to look at. And of course, you mentioned Eicher and Coal India. These are the stocks on the green side. BHEL taking it away, 1.5% higher, 130.95. And CDSL, no stopping this one, 2.8% higher, 1886. Remember, we are just marking the price. It's in a super bullish up phase. Charts are very stretched, and there is no point taking a technical view. Sakshi, over to you.
Right. So let's stay with the pharma stocks because they are the ones that are leading the pack. Divi's Laboratories now picking up pace about 0.5% higher in trade. We have Sun Pharma that's picking up pace too, and Dr. Reddy's again 0.2% higher. So not too much, but still some strength being seen here. Mr. Kant, your thoughts on the entire pharma pack, and which segment of the pharma space would you be more bullish at this current level? Would it be the direct plays? Would it be the hospital, healthcare stocks? Would it be the APIs or the lab stocks as well? How would you be looking at these three different segments of the entire pharma pack, sir?
Yeah, thanks for segmenting the space. I think hospital is a space where I'm bullish on. Other than that, be it the API specialty, chemical, or the direct play like all the formulations, I think they are priced to perfection. Most of the pharma stocks have been beaten down for the last 1 month. The outliers being Arvindo Pharma, Sun Pharma, or a Cipla. Other than that, they have taken a good beating from their highs. And I think they are done with as far as the valuation multiples are concerned. Even if you look at Arvindo Pharma, usually it used to trade at 15 to 20% discount to its peer. And I mean, it used to trade at 15, 16 times 1 year forward PE multiple. With today's up move, it's trading at 21 times 1 year forward PE multiple. I don't see margins getting any traction in any of the direct play pharma formulation companies. From here on, the growth of 12 to 15% would be difficult to achieve and maintaining the same level of margins. Same is the case with the formulation, I mean API or side of the business. But hospitals do look attractive to me with more of unorganized to organized moving into the foray and the kind of technology advancement these hospitals have done. So their per bed revenue has been increasing quite steadily and sustainably they have been increasing. So there, I think Apollo Hospitals stands a good buy list because their online platform is taking up in a big way. And next 2 years would be they would be significant operating profit contributor as far as the online play is concerned. The hospital has been doing 50-60% CAGR, so that will continue as business as usual. And the pharmacy will also be business as usual. So disruption will come from the online consultancy for Apollo Hospitals. So that is our topic at the juncture.
Okay. Got that. Fair enough, right there. So, hospital space looking attractive at this point in time. Another stock that I wanted to draw your attention to, Mr. Kant, is Credit Access Grameen. The stock is at a record high level, and it was also a stock that was mentioned by Deepan Mehta on one of our shows 2 weeks ago as well. There was the robust set of earnings that the company had posted about 3 weeks back. The stock had been an upward journey right from the point that it reported earnings. Robust earnings and the rise in the FY24 guidance. That was a key trigger point. But is it the time to buy Credit Access Grameen? Would you be a buyer at 1726 odd levels? And what is the fundamental strength that you see in the company going forward from here?
See, the growth which the management is talking about, I mean, they will better than the growth which they have been saying. At the same time, asset quality remains good. The company has been doing pretty well. And that's the story with the entire, NBFC space, particularly into the unsecured lending part or small ticket size lending. So that's likely to continue going forward as well for the next 1 year. I don't see any problem in that area. So all these banks, I mean, all these NBFCs are doing pretty well and likely to do well. Valuation wise, you have to be very careful, but again, it's a relative concept playing out wherever, and it's the individual comfort of valuing a company on a relative basis. So there, I think Credit Access Grameen is more of a hold from here on rather than a add-on. So one should not be adding on if they are holding a position. Please continue to hold it. No need to sell a profit out there and enjoy the ride as long as it goes further. And or else you can go for a basket buy in which Credit Access Grameen can also be one of the stocks. So this space is looking very attractive to me.
Okay, a few stocks, Sakshi, I'd like to mark, which are now showing signs of supernormal life. GMDC, again, it's a very, very high beta stock, and it seems to be trying to reclaim its all-time previous high. You'll see the daily chart coming in front of you. 404 in front of you, and the price was now similar to what we had on 20th of October. So almost 4-week high here, all-time high for the stock in terms of prices 431. So this is something that you can watch out for. What else is sticking sharply in the green, which we have discussed earlier? Sakshi, KPIT, again, I think it's going to be a fresh high, of course. 1387, it's slipping a bit, but nevertheless, it's a gap up and then a high that came in. BHEL, I think, is going to be the hero of the day. We caught it right in pre-open trade, 132.80. Any view, Dharmeshji, that you would offer on BHEL? Sideways trend since September of 12th, and it seems that after a 2-month rest, the counter is showing signs of strength.
Yeah, I mean, the company has forayed into the renewable energy segment, and they have been doing very well, and they are getting new orders from there. So that's a fresh lease of life for BHEL. But I think here one should be looking for more of a value buying margin of safety kind of environment, where I think GMDC stands a better chance. Because if you look at the fundamentals of GMDC, it's still a 22, 23 ROE kind of a multiple and trading at 12, 13 times after this volatile spurt up and down. So there the juice is enough. And then I think the third stock which you took the name of KPIT Technology. So this was one of the IT space stock which did pretty well. The numbers were excellent and their margins improved. The fact that they are basically into the automobile technology industry, which the segment itself is doing very well, and with the advent of electric vehicles and more electronic enabler of all the automobile space, these companies are likely to do well. So any declines on KPIT should also be accounted for. I would still give a skip to BHEL when compared to KPIT or a GMDC, just on the valuation and the revenue and profitability trajectory comfort which they have.
Okay, fair enough, sir. Mr. Kant, you mentioned RVNL in our initial part of the conversation. Today, even Ircon International is up in trade. I wanted to understand from you, from the entire railways pack, amid the elections conversation, and then therefore looking at the budget thereafter, how would you be really looking at the entire railway space moving from now until the next few 6 months or so?
See, from now till next 6 months is sorted out. So, the policies cannot be changed overnight for railway infra or the power infra is concerned, because these are long gestation kind of a policy framework, and you need to do more of tinkering to change them. So, the fear that if the present government may not take over and then there can be a policy change and this growth factor may not be there, I think they are not to be there. So these things take a long period of time. At the same time, the promise of the present government was that going forward from next budget onwards, 1.5 lakh crores of or 1.25 lakh crores of additional railway spends will be there, which is much needed considering the laning of tracks is concerned from 4 to 6, and new laning of tracks, 28,000 kilometers of tracks are still to be electrified. So there, and the technology advancement of all the railway companies from the safety measure, the coverage measures which they are taking, which is very essential for competition as well. So there, Ircon and RVNL stands a good chance, and these companies should not be looked at from quarter to quarter basis. I mean, the orders which they have are lumpy in nature and they take time to play out. So I would even suggest don't look at them from the yearly basis. Look at them from 3 to 5 year kind of a perspective. So RVNL is sitting on an order book of 65,000 odd crores, and the management itself said that they are targeting at around 1 lakh crores of order book, giving it a fair enough visibility of 3 times book to bill ratio with stable input prices, and cost escalation will built into most of their projects. So this is a good value buy along with the cost. So railway space, particularly if you are looking from 2 to 3 years perspective, is still a very good place to be in with a long holding period. And policy changes, I don't think is likely to be where the spends can be lowered in this space.
Okay, got that. All right. Well, I'll take one again stock with you before I let you go, sir, and that is on Nika. The stock is up in trade today, and we've been seeing a lot of investors really take fresh interest in these new age tech stocks after they've started to report profitability in the recent quarters as well, and promising management commentary on the future growth trajectory too. Your thoughts on, have you also started to look at things positively on some of them, if not all?
No, say as far as Nykaa is concerned, though they have reported profit much better than most of the newest technology or the technology concept thematic plays which are there. I think it will still take at least 10 years for them to justify the valuation multiples which they are talking about. So these are very hyped kind of a concept stock which have played out. And to me, underlying profitability, the profit which is being delivered on the table is more important than just playing out on the concept of trajectory which may likely to happen in next say 10 to 15 years. So maximum horizon, I think, in today's world with changing so fast changing technology and product preferences by people is 5 years. So I don't see Leica justifying that valuation. Forget about 5 years, even 10 years, they can't justify that. So it's a void for me.
It's a very potent statement that Dharmesh ji has meant on the fundamentals of an internet company that he and Sakshi just discussed. So one has to be really cautious into looking and differentiating between a momentum rally and a rally led by fundamentals. Some of the stocks in the internet space which have moved on the back of improved fundamentals are, of course, Paytm, PB Fintech, and of course Zomato. Let's look at the broader markets. Hindustan Copper is the stock that is looking very good technically, 150 to 85 in front of you, up about 2.5% as far as gains are concerned on the metal side. Aisha Motors is something which is the top gainer in the not only the auto space but within the Nifty as well. And we are seeing strength coming into Aurobindo Pharma, Coal India, ABB, and Manappuram Finance. Overall, the mood, Sakshi, is fairly weak. People are not interested in taking positions one day ahead of holiday. So the advanced decline ratio in the FNO space is 40 is to 145 in the ratio of 1:3 favoring bears. Nothing much happening on the long side unless you consider BSC and CDSL. Which we've discussed ad nauseum. Nothing much coming there, but strong block deals on Hindustan Copper. This is a very, very low liquidity kind of a counter and moves very sharply. I am just wondering if Dharmesh ji would want to offer a view on Hindustan Copper.
Again, good company, but again, you should have a long-term period holding for such companies because again, a volatile and it seldom have a good steady up move. So value-wise, valuation comfort is there. One should be holding into it, and upsides can be there. So downside is protected. How much upside can be there is difficult to predict at current juncture. But if you're holding period of say 1 year or so, 15-20% is the likely upside target. So nothing much out there.
Sure. All right. We'll let you go on that note, Mr. Khan. Thank you so much for speaking to us and sparing your time on day one of the summer 2080. And here's hoping this summer turns out great for you, for your team and your family members as well. And thank you so much for sharing all your valuable insights. And time now to shift our focus to our corporate radar section. And the company on our radar today is TeamLease Services. And the company's top management is with us. Ramani Dati joins in. She's the CFO of TeamLease Services as well. Welcome, Ramani, and thank you so much for taking the time out for this discussion. Well, let's start off with your earnings first, and then we will come to more interesting questions on the hiring trends as well. You declared your Q2 FY24 results on 8th of November. The top line increased by 16.2%. However, the profitability is where the pain point emerged. About 14.5% of a decline on a year-on-year basis is what we have seen. Your thoughts on what has really led to this dip? Is this a one-off, or are you going to be seeing some more pressure build up in the next few quarters too?
So our business has mainly three contributors. So one is the general staffing, the entire non-IT segment. So that has been growing really well, be it BFSI, pharma, consumer verticals. So they're doing very well. So that has led to our top line growth and also our net associate growth. The second segment is our IT staffing business under specialized staffing, and that's where we all have been seeing the impact over the last 4 to 5 quarters. And that's a higher margin contributor for us, which has directly impacted our profits on the bottom line because there has been no hiring happening. So we have almost remained flat on our revenue in our specialized staffing. The third segment is a degree apprenticeship business. So there also, because of some regulatory changes, we lost some headcount, and that has impacted our bottom line. But having said that, since our main business is general staffing business and that has been doing very well, from here on we are confident of expanding margins and profits as well sequentially.
Okay. Right. Ramani, I also wanted to understand from you, going forward from here, how would you be really looking at the revenue mix spread? Would it still be the general staffing business that would continue to hold a major portion? Because the margins are higher in the specialized business is what you're saying, right?
That's right. That's right. See, in terms of revenue mix, irrespective of the trends in IT, for us, general staffing business will always contribute 90% or above because of the sheer volume. We have close to 2.5 lakh employees under our non-IT general staffing cluster, and that will drive the top line for us. But once the IT staffing and degree apprenticeship businesses pick up, so that's when the margin expansion can happen substantially. Without
Okay.
IT staffing going, right now our view is that profits can expand 5 to 6% sequentially.
Okay. Right.
Good morning, Ms. Ramani. Welcome to Market Today and on Business Today television. How do you see geographical demand shaping up? Are there any specific states like the southern ones or up north, maybe UP, where you are getting strong traction based on festivities? And more importantly, within the broader non-IT space, which are the industries which are showing strong traction?
So firstly, regarding geographical, for us, South is always the largest contributor and followed by West and then North. So East for the last few years in terms of new job generation has been kind of weak. And especially with respect to the festival demand, this year we have seen very good demand coming from tier 2 cities. As you have rightly mentioned, the tier 2 cities in North as well as West and South. So we are seeing a higher demand coming, especially for formal segment. So which is a very good indication because so far in the past, we have seen the formal staffing getting generated more in tier 1 cities, the likes of Bombay, Hyderabad, Bangalore, Delhi. And now we are seeing good amount of demand coming from tier 2 cities as well. And in terms of the segmental demand, right now we are seeing very good demand coming from BFSI, and we believe that would continue for at least 2 to 3 years, followed by consumer vertical, FMCG, telecom, pharma, agri-related verticals. So they all have been doing well. I mean, except for IT, in fact, all other verticals are doing very well. Maybe a little bit of the new age startup companies, fintechs, edtechs, there is no new hiring as such happening. And also during festival season, we have seen the e-commerce sector is relatively kind of, in terms of hiring, relatively they did a little lower than what they used to do around COVID times.
Oh, okay. In fact, this was the point I wanted to pick with you because, before the festive season really started, we were hoping to see, tons of jobs getting created on a temporary basis because of the festival season and added on World Cup being hosted in 12 cities as well. So did you see that bump up at all or not yet?
No, there is a little bit of bump up, but I don't say it is very substantial, at least in the organized space that we are catering to. Definitely the festive season, pre-festive season, and the World Cup season might have added 1 or 2% additional contribution in terms of overall headcount that we have added, but not something that is like one-off.
Can you give us
which
more
will take-
granular details on how many jobs were created on a temporary basis during the festive season? And of this, how many are you looking at getting converted into permanent jobs?
Yeah. So this quarter we have added about 15,000 net jobs, but this is net of attrition. Since we are in temp employment business, the attrition levels are very high. So in any given month, at gross level, we add about 20,000 headcount, of which attrition would be again about 17 to 18,000. Because of festive season, that 20,000 has gone to 22,000, 22, 23,000. So that's why I'm saying it's not something which is like really material. So there is a slight hike, and by Q3 we believe we'll again go back to that 20,000 gross addition per month, resulting to a net addition of 13 to 14,000 headcount.
Right. Sakshi, if you do the numbers, Ramani is adding 1,000 people or 1,100 people a day, and bidding goodbye to somewhere like 900 people a day. That translates to somewhere like 125 fresh additions every hour, if you consider 22 working days and 8 hours a day in terms of working schedule. Very sincere compliments to you, Ramani. When we look to hire, hiring 5 or 7 people over 3 months takes so much of time, and you are processing somewhere like 2,200 people in and out of team leads in a single day. Again, our congratulations. Let's look at the other part of your business in terms of wage hikes. Of course, the money that Team Lease makes is the difference in what it charges its customers like Kotak Mahindra Bank, like other banking institutions, and what it pays its employees. The difference is what Team Lease makes. When you negotiate contracts on behalf of your employees with big corporates, what is the biggest pushback that you are seeing?
Yeah. Firstly, ours is a very, operations intensive business and a volume hiring business, especially on the general staffing side. And as you have rightly mentioned, our markup is only the difference between what we charge the customer and what we pay to the employee, which roughly translates to about only 2.5% gross margin. And in terms of rupee value, it's about 700 rupees. And obviously, the biggest pushback from a customer is that since they are giving a higher volume year on year, can the markup of 700 rupees, can it further come down? And that's where we have to bring in other value added services, productivity enhancement for the associates that we are deploying at client location, managing their attrition, and also managing their attendance, leave, exit. So all of these tools help us to kind of maintain that markup of 700 rupees per employee per month. And then on top of that, we also have to ensure that the back-end HR management and compliance management is on track.
Okay. Ramani, another thing of a big debate that has sparked over the last 2 weeks is something I wanted to discuss with you. The 70-hour work week is what everybody has been discussing. What have you been, looking at? Have your clients, big corporates, getting big on this trend, or are they still okay with the current regime?
Yeah, I mean, our clients are okay with the current regime, so there is no discussion as such from our clients on this. Because on non-IT side, wherever it is applicable, the overtime charges are also applicable, and employees get the allowance, overtime allowance, whatever is required under the law. The question is specific to IT and white collar jobs, but there also it goes with the demand and supply. So there are companies where employees are willing to stretch more. So there, it happens, but again, at least based on the employees that are under team lease, we haven't seen anything unusual in terms of number of working hours. So it's typically in that 40 to 50 hour per week kind of range, even in IT.
Ramani, I'd like to ask a broader question. We'll play out the long-term chart of team lease in front of our viewers, and the all-time high for the counter has been somewhere like 5,500 rupees at the moment trading at about 50% of its previous all-time high that we had seen. When you look at your margins, Ramani, very meager margins, say 1%, 1.5% on the net level. What do long-term shareholders in Team Lease should be looking forward to in the next 1 year or 18 months from Team Lease's management? There has been a very sharp erosion in the stock price against the background of a roaring bull market in India.
No, you're right. Our margins got impacted, which has led to the correction in price as well. As I have mentioned earlier, our largest margin contributors, which are IT staffing and DA, so both have taken an impact, and that has directly led to erosion in our margins. Almost 35% of our profits used to come from IT staffing business, and that got fully impacted with the headwinds in IT right now. So for the next 1 year, we are focusing on maintaining a revenue growth of upwards of 25% with a margin expansion, steady margin expansion of 5 to 6% quarter on quarter, driven by operating leverage as well as product mix. As well as the third point for our business is also maintaining high return on capital, because our business is an asset light, less capital intensive. So we generate almost 60 to 70% return on capital in our main business, which is general staffing. And also at overall group level, we have to maintain upwards of 35% RSE. So these are the three things that we continue to focus. So revenue and headcount growth in a general staffing business, margin expansion driven by operating leverage and product mix, maintain ROCE upwards of 30%.
All right. Well, on that note, thank you so much, Ramani, for being with us and sharing all the insights from your quarterly earnings and the business update as well. All the very best to you for the upcoming quarters as well. And here's hoping for more interactions going forward from here. Yes, Shail.
Thank you.
Right, Sakshi, time now to wrap up, but at about 9:50, we've seen the Nifty sort of consolidate in that sideways to flat band, simply because tomorrow is a holiday. And remember one more thing, now that we are at the midway of November, now options prices will contract faster in the remaining fortnight, because the time value will now sort of eradicate further. Nevertheless, something to look forward is the 19,400 option for November 16th for Nifty. This is the weekly one that I'm talking about. 103. It's already contracted 30 rupees from its day's high, and probably a swing trade could see it move to 19,490 on the index. Let's see how it happens. We'll do a check once we return at 2:30, but it's the 19,400 call, weekly call for Nifty on 16th of November. Expiry is what you should be watching. 103 rupees for the moment. Let's see what happens till 2:30. Sakshi.
All right, and with that, we will wrap up this special edition right here. Many thanks for joining us. Slight downtake on the Nifty. You can see a 68 point of a fall, 19,456 currently. But we'll continue to watch out for major trends on the markets as we progress along. Many thanks, Shail, for being with us on this edition too. And see you again in the closing session as well. Many thanks for being with us on this edition.
Step into the new Samvat with a bang.
Celebrate Diwali's Muhurat trading with us.
Your path to prosperity begins here
Stay tuned for expert insights
on investing opportunities.
and don't miss out on the brightest trades of the year.
Diwali's Motor Trading, lighting up your financial future.
Tune into Market Today for our Muhurat trading special this Diwali only on Business Today TV.
Conglomerate partner Darwin.
Well, India's favorite festival, the Dhanteras and Diwali, are just around the corner. And of course, who would not like to complete their aspirations of buying jewelry, of course, buying cars? You know, India has been on the verge and of seeing a breakout when it comes to really buying cars, especially the SUVs. And today, I am at one of the largest dealership of Tata Motors, the Trio Tata, at Safdarjung Enclave in New Delhi. And with me are the car